Hello and welcome to today's webinar, and thank you for joining us. My name is Laurent Harrison. I'm an investment advisor and certified financial planner with Bell Investment Advisors. I have in the room here my colleague Rohan Nayak, also a certified financial planner and relationship manager, and a fellow member of our financial planning team here at Bell. Today's webinar topic is, are you missing strategic benefits from Social Security? But before we start, let's get a few housekeeping items out of the way. So if you're having technical difficulties, please call our office at 1-800-700-0089, or you can also submit a request for assistance via the questions box on your GoToMeeting control panel, which should be in front of you on your screens, your computer screens. If you do have questions during the presentation, please submit them via the questions box. If we are not able to answer all of the questions today, we will provide an answer to you via email, since we do have email addresses after the presentation is over. So today's presentation is going to cover a couple of areas. When you might want to start your benefits, for example, your specific benefit versus what's called a spousal benefit, how to optimize your Social Security benefit, and as simple as how to access your Social Security statement. However, before we get into too much detail of our presentation today, we thought it might be helpful to address a pretty popular question, remark, you can even call it a myth, which is Social Security will not be around for too long. So this is a myth that we often hear. It's a question, a remark with our clients. It's a huge concern for a lot of Social Security recipients and those planning their retirement. And it's certainly a topic that we'd like to address. So Rohan, why don't you tell us a little bit about your findings on this subject?
Sure. Thanks, Laurent. We see many clients and retirees in general question if Social Security will be in existence for their own retirement. But the reality is Social Security currently has $2.73 trillion in trust fund reserves. That's a whole lot of money. At the current rate of payout, this trust fund is expected to be exhausted in 2033. Even after 2033, Social Security revenue is expected to cover 77% of scheduled payments, meaning the revenue Social Security collects in 2033 will cover 77% of the benefits paid out in that year. Now, this may be the worst case scenario. The federal government would likely not allow this to occur. In fact, the federal government previously modified the full retirement age from age 65 to the current full retirement age of 66 or 67, depending on your birth date. If this full retirement age was pushed to age 70, this immediately solves the problem and makes the system solvent. So we feel you should include Social Security income as part of your retirement, since it will likely be around for much, much longer than you think.
Great. Thanks, Rohan, for that research that's been completed. So here at Bell, we have experience with all types of clients, client situations, and needs. And in fact, what we're going to show on this screen are really some typical approaches to Social Security. So in column 1 represents the age that you might take Social Security at this age, and then the column 2 there to the right is a typical reason that you might want to take Social Security given the age in column 1. So let's go through that in a little bit more detail. So row 1 says that the client or the recipient is going to start taking Social Security at age 62. This is actually the earliest age that individuals can take it, as long as you are not a survivor or a widow. You are eligible to start taking it at age 62. Now, why would you want to do that? Typical reason really is to meet cash flow needs. If you happen to retire early, for example, or you're only maybe working part-time and you need the additional cash flow, certainly being able to get that fixed income every month can certainly be helpful, and so that would be a typical reason that we see individuals inclined to take their Social Security, what we call early. The next row, row 2, has in the first column something called FRA. We're going to be talking about FRA quite a bit in this presentation, and that represents your full retirement age. And as Rohan said earlier, Full retirement age can change. It's really based on your birth date, and we'll be talking about that a little bit later. But really, for those of you that were born after 1960, full retirement age is generally around 67. If you were born in the 50s, it's 66. And if you go all the way back into the late 30s, early 40s, it's closer to 65. So full retirement age is really a time when most individuals think about taking their Social Security benefits. It's really the time that they've decided to retire from full-time work, and it's certainly an excellent time to replace that missing income, which is no longer coming in since they have stopped working full-time. So that's a pretty typical scenario at FRA. And then the last row, row 3, is taking Social Security at age 70, and that would be what we call delaying your Social Security benefits for several years until the age 70. So the thinking here is you'd want to take the highest benefit possible, and for every year that you wait to take your Social Security benefit, and Rohan will be talking about this, but essentially your benefit increases. So these are 3 typical approaches that you might take in thinking about when to take Social Security. What's interesting, though, is the Social Security landscape has changed. So with the advent of new studies and essentially in research, I want to refer you to an article, or really an administration report by Dan Kaplinger's article, which shows there have been some recent changes in these 3 areas. So first, the percentage of people taking Social Security at the earliest possible age of 62 has declined since 2004 pretty significantly, from 50% to 37% among men, and from 52% to 42% among women. So clearly, individuals are doing research and choosing to not take it early, not take that penalty, if you will, and delay. Second, more people are waiting until they reach their full retirement age, currently, again, 66 or 67. And since 2005, those percentages have also risen from 22% to 31.5% for men, and from 17 to 25% for women. And then finally, although the numbers are still on the smaller side, certainly the percentage of those waiting past full retirement age, all the way up into their late 60s and as late as 70, has doubled in recent years. So what does this mean? Well, the data itself concludes that more people are getting smart about Social Security. They're thinking about when they can take it. They're doing their homework on the amount and the benefits that occurs by waiting to take your benefit. And certainly plenty more work to do in this area. But without getting into too much more detail, I'm actually going to pass it back over to Rohan, who's going to explore specifically why people are delaying their benefits. But we'll start with some basic cases.
Sure. Thanks, Laurent. Let's look at some basics here in terms of why Social Security is so important to you individually. It is the only government-guaranteed benefit to adjust with inflation for life. You can think of it as a fixed income which behaves like a pension for the rest of your life. You're entitled to Social Security because you're paying into it as long as you're earning income, no matter what age. The longer you work, the more you put into the system, and that has direct effect on your benefit. Now, the timing is an important factor for your benefit when comparing taking it early versus delaying it. If you take your benefit before full retirement age, it can be reduced as much as 20 to 30%, and this reduced benefit sticks with you for the rest of your life. But on the other side, for every year you delay your benefit, it increases by 8%, which is pretty substantial. The very last point on this slide is probably the most important takeaway from this webinar, and that's if you're married, were married, now divorced, or a widow or survivor, just know that you could be entitled to a potential spousal benefit. Now, this is a separate benefit from your own benefit. Not many people know about this. Social Security does not openly publicize this, but it's definitely worth to take a look at if you're eligible to collect this extra benefit. Now let's look at some scenarios here in terms of spousal benefits. I'm going to use Bob and Sally as an example to explain some of the rules here. It's just easier to understand instead of me saying working spouse or non-working spouse. So let's look at Bob and Sally, a happily married couple. As a married couple, they each work and are earning separately and contributing into the Social Security system on their own. In any situation, especially in marriage, you should know you're always entitled to collect on your own benefit. So Bob is entitled to his own benefit, and so is Sally. To become eligible for a full benefit, you have to pay into the system for 40 quarters, which is 10 years. Anything less than 10 years, you will not be able to collect a benefit on your own. So Bob and Sally, the assumption here is they worked all their lives and can collect the benefits on their own. Now, when it comes to working spouse versus non-working spouse, Bob and Sally as a married couple, if both work and are contributing to the Social Security system, they both have their individual benefits. But let's say one of them is working and the other is not. Let's say Bob has been working and earning all his life and Sally has not. Sally is still entitled to a spousal benefit based on Bob. Sally is able to collect 50% of Bob's benefit if Sally applies when they both reach full retirement age. Now, it is important that this is at full retirement age. Age is very important. If Sally applies when they're both full retirement age, this is the simplest strategy.
Great. Thank you for that information on marriage. It's good to know that both of them are entitled to their own benefits as well as a potential spousal benefit if they've been paying into the system. However, here's a good question, is what happens if Bob and Sally are not too happy in their marriage and are contemplating divorce? Sure,
we can take that same example forward. Now let's consider Bob and Sally no longer happily married. Now they can be happily divorced. Both worked for more than 10 years, thus qualify for their own Social Security benefit. The divorce does not affect the individual benefits. Sally and Bob are still eligible to collect a Social Security benefit on their own. Now let's look at Sally separately for a moment. Not only is Sally eligible for her own benefit, she still qualifies for a spousal benefit based on Bob's benefit after age 62. Now, there is this 10-year rule, and that's you must be married for at least 10 years to be able to collect the benefit on the former spouse. So, you know, if you're getting divorced and you're on the brink of the 10-year mark, I would really recommend you just wait it out. Don't divorce after 9 years and 353 days. It just helps in the long run.
Thanks, Rohan. Again, that's helpful information on this situation, which is divorce. But I have a question, which is, what happens if Sally would like to collect on both her spousal and her own benefit? Is this possible to do concurrently?
Unfortunately, the answer is no. Even though Sally is eligible for her own benefit, separately a spousal benefit, she's not allowed to collect both benefits together at once. She can only collect her own or the spousal at a time.
Okay, great. Thanks for that.
Now let's look at the widow or survivor scenario here. I kind of touched on it in the divorce scenario in my previous slide, but it's along the same lines here. Even as a survivor for Sally, when Bob passes away, she's still eligible to collect her own benefit. But to be eligible for a spouse's benefit, you have to have been married to a deceased spouse for at least 9 months. So Sally cannot marry Bob, and in a month, if Bob passes away, Sally cannot collect a spousal benefit. This threshold is set by Social Security. They had to have been married for at least 9 months for her to collect the widow/survivor benefit. Now, as a survivor, you are eligible to collect a benefit as early as age 60. It's a reduced benefit. You can receive the full benefit at full retirement age. We don't recommend taking the benefit at age 60, but now that's based on a particular situation.
Great, Rohan. That's also helpful from a widow survivor benefit. Now, I have a question. Is what if a person decides to remarry? Are they still eligible for that, or do they lose their widow or survivor benefit?
Good question, and that's the last bullet point on this slide here. If you remarry, you're not able to collect benefit on the former deceased spouse. Now, there are exceptions to this, but it gets complicated, so we won't get into it in the details right now.
Okay, thanks for that.
Now, I want to share a real-life example here of our clients, Fred and Jill. These are fictitious names, but I'll use those names to share this example. Now, Fred and Jill are married. Fred, age 58, Jill, age 59. They're financial planning clients of ours. They came to us and they told us, we're planning on taking our benefit at age 62. Fred's benefit at that age 62 was $1,700 a month. Jill's was $1,300 a month. And based on their financial plan, we used a life expectancy of age 88 for both of them. So during that time period, from when they would start at age 62 until age 88, if they were to collect it, they would collect $854,000 over that lifetime. Now, at this point, we really pushed back a bit and said we strongly recommended a Social Security analysis. They agreed. We went through the analysis, and what that showed was it would be beneficial for Fred to actually wait and take his benefit at age 70, at which point his benefit would be $3,100 a month. For Jill to collect her spousal benefit at full retirement age, which would be about $1,250 per month from her full retirement age until age 70. And at that point, she would collect her own benefit, which has gone up to $2,600 a month. Now, that same time period until age 88, over that lifetime, in this scenario, they would collect $984,000. So in this actual scenario, our clients had an expected savings of $130,000 with the improved strategy versus the strategy they initially chose on their own.
Well, that's a pretty significant change going from essentially $854,000 lifetime benefit to $984,000 or $130,000 increased amount. However, we do have a lot of clients that come to us, Rohan, with quite a few of them have pensions. So my question is, well, how does a pension affect Social Security benefits or even spousal benefits?
Sure, that's a good question. And pensions can be a caveat in this whole spousal benefit scenario here. There are certain situations in which specific pension can potentially affect your own Social Security benefit or the spousal benefit. We usually see the situation arise with government or teacher pensions. Specifically, we have seen this with our clients who have CalSTRS and CalPERS recipients fall into this category. The only time pension income affects Social Security is when you work in a job that was not covered by Social Security, meaning you paid into that pension system instead of Social Security. So a good takeaway is you just know that if you have a government or pensions or teacher's pension, this may affect your own benefit or your spousal benefit. Now, these benefit reductions are not reflected in your Social Security estimate statement that you receive. We covered this in great detail in our Social Security analysis. These are very important factors to look into since it affects your income in retirement and your overall retirement plan.
Great. So we've covered key points on Social Security timing and specific benefit scenarios, which was really helpful. So thanks for that, Rohan. Basically, should you be doing a full analysis on your Social Security, either on your own through, say, a financial planning firm like Bell Investment Advisors, or should you be really calling Social Security Administration to do your homework? And the answer is perhaps yes. Also, we get a question is should we be reviewing our Social Security statement? So the questions that I have for you, our listeners today, is this you? Have you yet to file for Social Security? Are you between the ages of 60 and 70, or are you doing a financial plan in your mid-50s, for example, or early 50s, and you want to know what your Social Security benefits might be. Are you single, or married, divorced, or a widow? And are you questioning when to file for Social Security, or have you really already decided to file for Social Security and maybe you're just looking for confirmation that what you've done is appropriate? All of these situations really would benefit from a Social Security analysis. Taking your benefit at different times, and we've illustrated that in the presentation today, can mean very different things in terms of actual numbers. Your situation may require that you take it early, or it may be in your best interest to take it either at FRA or even late in life. Certainly, we strongly recommend you start with essentially accessing your Social Security statement. And so we've put the URL and website address here at the bottom of this slide. It's www.socialsecurity.gov/myaccount. It's really important to take a look at that today. It certainly changes every year that you continue working and continue paying into the Social Security system, but again, it can make a big difference overall in your analysis. And certainly, please come and chat with the folks here at Bell or with your own investment advisor or certified financial planner about Social Security.
Now, that's officially the end of the presentation, but we have some time left here for questions. So if you wish to submit a question, please type it into the questions box on your GoToMeeting control panel. We'll answer as many questions as we can, but if we don't answer your question specifically, we will get back to you with an answer after the presentation.
Great. So while we're waiting for a couple of questions here, there's one here that's coming in.
Laurent, maybe you can take this one. What can you do if you have recently filed for your Social Security benefit and you're receiving it, but you change your mind?
That's a great question. So Social Security Administration does allow some flexibility really in the first year that you've selected your benefit. So if you've started your benefit and it's within the first 12 months of starting it, you can go back to the Social Security Administration and ask them to stop it. And secondly, it also means that you have to pay back those benefits in a lump sum. It's a bit of a pain, but if you're willing to do that and pay essentially those funds that you've received back, then essentially it's as if you had not started your Social Security benefit. So really important, though, point, which is you can only do that in the first 12 months after you've started taking your Social Security.
Here's a question that just came in. How can one get a Social Security analysis? Will the Social Security Administration do it, or is this a feature of financial planning? This is well covered under financial planning for us. It's one of the products under financial planning that we cover in detail. So we have experience doing this kind of analysis a lot recently for our clients. And if you go to the Social Security Administration, there's no such thing as an analysis when you go out there. We've had some challenges actually in terms of going to the Social Security office and explaining to them how we can apply certain strategies when our clients do want to implement them. So I would strongly recommend talking to your investment advisor or your financial planner, or get in contact to one of us. You can see our contact information on the slide up here, and we can have that conversation.
Great. Thanks for those questions that are coming in. And again, we've got a couple more. Here's one, Rohan, for you. If I do have a government pension, say a teacher's government pension, how might that benefit be reduced?
Sure, that's a great question. It's a simple question, but might not have a complicated or might have a complicated answer. This varies based on what kind of pension you have. Now, some of the questions you have to look at in this situation is the pension a government or a non-government pension? How many years have you worked in the job that is providing the pension? Did you pay into the Social Security system while you were working there? Questions like of these kind. So we would have to take a look at the details of the pension to answer this question thoroughly. In short, just know the amount of pension reduction is different for your own benefit versus the spousal benefit. I won't get into it too much. We can answer this question specifically in more detail offline.
Great. So I have another question coming in from one of our listeners. It's about a spousal benefit. We may not have time to answer it, but I just want to speak to it. I'll actually go ahead and speak it right now. Can each spouse get a spousal benefit on the other's Social Security benefit? So I'm going to answer part of that, and then I'm going to have Rohan kind of finish it up. So just to clarify, each spouse qualifies for their own benefit, and they potentially, basically, qualify for a spousal benefit. Now, it does get really complicated on who should actually apply for their spousal benefit and who should actually apply for their own benefit and the timing of that. As Rohan mentioned earlier, full retirement age has a big factor to play into this. But essentially, you are both eligible for a spousal benefit, but I would say it's best to get either an analysis or talk with your investment advisor or financial planner. Rohan, would you add any comments to that?
Yes, and it's exactly on the terms that Laurent said, where it really has to match up in terms of the ages of two spouses and also the timing. So that's why the analysis really go in depth in terms of what's the right timing for you to collect your spousal, and we compare it to one spouse taking the spousal benefit versus the other, and it's really analysis based on that.
Great. Well, we have time, I think, for one last question. There's one that's actually coming in that talks about a follow-up question about the divorce benefit situation. So maybe, I think Rohan might have an actual client situation, obviously not naming names, that he can talk about. Again, if you have a question that you've sent in that we don't have time to answer today, we'll actually email you an answer.
Sure, and this, I'm just trying to think of a divorce benefit situation that we've had last year with a client who came to us. She was married for 11 years, and recently her ex had passed away. And I'll use Bob and Sally again here as fictitious name to explain this, just to make it easier. So Sally came to us at age 66. She was divorced. Bob recently passed away. She was planning on collecting her own benefit at age 66, which was about $2,000 a month. And when she told us this, we really recommended that, let's make a phone call to Social Security together and find out if there's a potential spousal benefit that she can benefit from. We did that and actually found out that she was eligible to collect $2,300 a month instead of $2,000 a month, which helped her receive $3,600 per year more under a spousal benefit compared to her own benefit. Furthermore, her own benefit continues to increase until age 70, and that can come into play when she turns 70. So just being married for 10 years, divorced, and a widow made her eligible for the higher benefit.
Great. Thanks, Rohan. Now, there are a couple questions that we weren't able to get to, and as I said, we will follow up with you individually. Really appreciate you sending in your questions. I'm glad to hear or see that there's a lot of interest in this subject. But unfortunately, that concludes our presentation portion of today's webinar. So a recorded version of today's webinar is going to be available on our website within a week. Additionally, all of our past webinars are available on our website. And although only clients can access specifically our investment committee updates, all of the rest, basically the public can access our standard webinars. So join us for a lunch and learn if you're available and in the Oakland area next week. We have a great lunch and learn on Wednesday, April 30th with our founder and president, Jim Bell, and Scott Fong. The title of that is The Art of 1031 Exchanges for Your Real Estate Investments. Increase your wealth while deferring taxes. It's at noon on Wednesday next week, and it's going to be a great presentation if you own investment real estate or are thinking of doing something with your investment real estate. It's in our Oakland office from noon to 1:30. Reservations, please give us a call at 800-700-0089, or you can always email Jay Roundtree, and her email address is Roundtree, ROUNDTREE at bellinvest.com. You don't need to wait for our monthly webinar or letter to stay in touch. We update our website with new content regularly, and we post daily market updates on Twitter. Bonnie Bell has a blog focusing on career life coaching issues, and you can find her at careerlifecoaching.bellinvest.com. As always, if you have a question about your portfolio, about financial planning, or about career or life coaching, please don't hesitate to contact us by email or phone. And we really want to thank you for attending today's presentation, and hope you have a good rest of your day. Thank you so much.